So, the big question is this: how are entrepreneurs and real estate investors like us, ones who want to grow our businesses and who are tired of paying for really expensive alternative lending, how do we tap into the most inexpensive money available and do it without the hassle of typical borrowing? That is the question, and this podcast will give you the answers. I'm Merrill Chandler, and welcome to the Are You Effable podcast. Welcome, everybody. Merrill Chandler here, host of Are You Effable, the podcast that is changing the relationship between borrowers and lenders and making you fundable. So let's continue. I'd like to introduce my guest, my friend, my business partner, Brad Burnett. He is our Chief Marketing Officer and was responsible for the vast majority of making our $1 million funding formula into an easy and methodical way of delivering fundability to all of our students and our clients. Welcome.
Thank you. I'm excited to be here again, and I'm excited to talk about automatic underwriting systems and the mystery that they have been and the enlightenment that they are about to be. So let's dive into it.
Yeah, no, so exciting. So first of all, he talks about automatic underwriting systems. And automatic underwriting systems, while it sounds technical and geeky, etc., it is, but we're going to make it how it really applies to your pocketbook and the amount of money that you can borrow. But before there were automatic underwriting systems, there were manual underwriting systems. How many of you done a mortgage? That's a manual underwriting system for the vast majority of lenders out there until recently, right? But one of the things that we have come across is that when you're in manual underwriting mode, they want documentation because nobody trusts the data from our credit bureaus, our credit reports, the things we put on our application. There's all kinds of messes going on out there. So they want to know when you say you make 60 grand a year, they want to see the documentation that you have 60 grand a year. This requires us to have financials, tax returns, and all the things that are in the way, especially real estate investors, those what we call those prohibitive businesses, the businesses that are a little suspect, right?
High risk.
Let's call them high risk. My own. Our business is a high risk business because of the notorious nature of other credit repair companies. Even though we don't do credit repair, we get looped in with that. So let's talk a little bit about the history of manual underwriting and some of the things we learned at FICO, and then introduce it. How do we get back to automatic underwriting and the benefits for all of our funding hackers out there?
Well, and so that brings up the point of like the big challenge that I've seen in the decade that I've worked with you is that people just don't know what they're up against, and the system. I mean, how deep are we going to go into this? Because are we talking about the approval scoring? Are we talking about how underwriters like the thing that I always liken them to trolls that live under a bridge? If you're an underwriter and that's not you, congratulations. But
you're one in 10,000.
We never meet them. We never talk to them. But they're there to protect the bank's money. But they're also there to make the bank money. And how could an underwriter make a bank money? Well, what if I got approved at the lowest level, not the highest level possible? Would that make the bank more money? Like this, and I don't want to make it seem like it's the conspiracy theory here.
But profit motive and conspiracy theory, sometimes there's a little fuzziness between there. There's an intention behind it.
There's a lot of crazy shit that's happened in throughout history for money. A lot.
Absolutely. This is not alone.
And so it really is that thing that so many people, the problem is they don't know why they're getting denied. Right? And you go full doc, now that means you've got a little
a little troll.
A little troll. You got a little troll looking at your paper, right? And they're trying to figure out how they protect the bank's money.
Right. Okay. First of all, how many of you met? I'm trying to find where my camera. How many of you have met an underwriter in the wild? let's not talk yet about that they're becoming a dying breed as a function of lending. We'll get into that in a minute. But how many of us have actually met an underwriter in the wild?
That isn't your spouse, significant other, or family member.
Right? Because they literally, he calls them a troll, right? I throw them in with the mythical creatures that hang out with the griffins and the unicorns, because they are in the back room, even at a mortgage office. They're like, let me go talk to the underwriter, right?
Yep.
And they're like, whoosh, behind the door, and they disappear, and all of a sudden, new instructions come out from the voice of this mythical creature, right? So, underwriters, while as human beings, you're awesome. We love you. We're all in. As a function of the loan approval process, yeah, like he said, there it's a little hinky there, right? So one of the things that we need to create is that you are fundable only if a lender gives you money. You can call yourself anything that you want, but until a lender gives you money, you don't get to wear the title, right? Are you effable? So our experience is that in the manual underwriting field, there's a massive change occurring. But manual underwriting means full doc, income verification. You've got to prove your tax returns, just what your current mortgages are right now when you go to a local mortgage broker, right? They want to document everything because, as we've said before, one of the things I live by, he who has the most documentation wins, right? Well, if you have all the documentation that an underwriter needs, you're more likely to be approved, right?
Now, and I want to bring something up because I know it's not for this episode, right? This isn't the right time. But if you have a truly fundable profile, they might even ask you for full docs, and we'll tell you how you can actually avoid that, or oftentimes just get around it. We're going to talk about that. It's on another episode. I know that for a fact. But one of our clients, that was their experience, where they magically pass that full doc process, and why. And so we'll talk about that another time. So don't think that we're always stuck. That's one of the one of the big misnomers, right?
Yeah, it doesn't have to be this way, and there are literally whatever funding hole you find yourself in, there's a ladder, easy steps to climb out of that.
Yep.
Because the whole topic today is how, if you know the rules of the game, you can hack the game to win, but you got to know the rules, and that's what we're talking about. What rules are there? We don't know the rules because we just know give us certain documentation, and then they do that little cauldron mythical thing in the back room, and we kind of like, ta-da, denied, or ta-da, approved.
Or I need more.
Yeah, or I need more information, right? You've never been asked for more information during a mortgage, right? So that's manual underwriting, is all the documentation, more and more and more until they are satisfied. Then something has been happening over the last few years, but more significantly in the last 2 to 3 years, huge movement towards what are called automatic underwriting systems, AUS. So you're going to hear, so remember that's what that means, but automatic underwriting systems. And these automatic underwriting systems automate the entire process, and it's AI. So as Brad has said in the past, we're used to filling out an application and doing this old Neanderthal information piece of paper, and then we submit it to those guys, and the automatic underwriting system is like applies millions of lines of code and algorithms in order to determine whether or not you're A, full of shit in your application and fraudulent, or B, whether or not they're going to approve you, and most importantly, how high those approvals are if they're going to approve you. We are about, in this episode, talking about those rules, automatic underwriting systems.
Yep. So until this podcast, it's been a mystery. What they're looking for, what are we going to be able to provide, and how can we get the approval in the most effective and the fastest way possible? Think back, Merrill mentioned it, like a couple years ago, all of a sudden this takes off, Rocket Mortgages.
Yes, perfect example.
Rocket Mortgages, they're the leader of the automatic underwriting systems in the mortgage industry.
Yeah.
Credit cards have been doing it for a while, but
Yeah.
the big loans, the instant or automatic approvals on business lines of credit,
Yeah.
that's all new, and
Yeah.
it's in its infancy.
Yeah, it's barely getting its legs under it, right? So let me tell you about an example to make this transition from manual to automatic. So I'm sitting at FICO, second FICO, right?
Yep.
You guys are going to hear about this every single time because we actually have a FICO liaison who we get to ask any question we want, and they hook us up with meetings with the people at FICO. We're sitting here in one of these classes, and I am seeing one of these fintechs, right, like SoFi or Oscar, Cabbage. There's this whole industry, and then there's this sweet woman, vice president of SunTrust Bank, right? And it was not quite a debate, but it was SunTrust had just adopted. They were moving into the FICO realm to convert everything over to automatic underwriting because they'd been manual every step of the way. And they were basically interviewing her as to why. And the interesting thing is she said, at SunTrust, we had to be profitable for manual underwriting, to take care of the person and all the people who had to weigh in to whether or not we approved a loan. It had to be a minimum of a $38,000 loan at 6.5% interest for 3 years. Those were the terms for them to break even. That means they could not profitably do a $20,000 or a $30,000 loan. They couldn't give a better interest rate, even though at the time we met, the interest rate, the prime was like 2, right? So it could have been a 4% loan, but they couldn't offer that loan. And so they were getting priced out of the market because they couldn't keep up with these fintechs, the financial technology companies, by the names that we've mentioned, had no chance in hell of competing against those because they were still doing it manually. That's the transition between why everybody, even the old school banks, are moving to automatic underwriting systems so that they can use artificial intelligence to establish your fundability, literally 30 seconds, right? So
Yep.
I have a question. Oh, go ahead.
No.
Oh, so question. How many of you, so just to make sure that we know what we're talking about, how many of you have received an approval for a credit card in 30 seconds, 2 minutes max, but really while you're on the phone, while you're online, talking to your banker, how many of you, right? So many people. When we do this in our public conferences and stuff like that, more than half the room raise their hand saying, yeah, I got an approval in 30 seconds. That's automatic underwriting, right? Automatic underwriting. More importantly, how many of you have received an email or a letter from that credit card issuer where they said, we've just raised your limit. Congratulations, we just gave you another $500, $1,000, $5,000 to your credit limit. Well, hold it. Automatic manual underwriting would require income verification, would require that you have tax returns, that would your financials. If it was for your business. But guys, think about it. How many of you have received that letter saying free money? Free money, no income verification, no tax returns, and no credit inquiry. How are they doing this? Now, you don't get to say, because I pay my bills on time, because you're soon going to know in a deep dive later, FICO measures 40 characteristics of your profile. Paying on time is one of them. You don't know jack about what they're looking at to approve you for this free money. No inquiry even. They don't need to look at your credit report. They just are measuring your internal data with your relationship with that bank. So if you know the rules of this game, you can hack. You can navigate your way to approvals, because what if you knew those answers? What if you knew what it took to get approved without income verification, tax returns, or even a credit inquiry?
Well, and to add to that, excuse me. To add to that, the cool thing is that this, as a process, as a system, has been refined for years
Yes.
and years and years on the personal side of funding, And it's now being applied on the business side of funding. And that's one of the coolest things that I ever experienced when we're working with our clients is when they call us and tell us, oh, hey, my business line of credit just got an automatic limit increase.
Yes.
That wasn't possible a few years ago.
No. In fact, we learned about that at FICO, the first one, when we spoke with the SBSS, which is Small Business Scoring Service. We may say that a lot, but it's FICO's business credit scoring, right? We learned that SBSS was being developed. They were buying the Dun & Bradstreet data. We'll get into a later episode about Dun & Bradstreet and Paydex. It's just
garbage.
For now, it's a dinosaur. But that's all we'll say right now. There'll be a whole episode on it, right? But bottom line is that FICO is buying all the data from Dun & Bradstreet and scoring it and perfecting their model. It'll take, and there's this perfect opportunity where they have not dominated the market yet, but Paydex isn't a thing, and so we who are funding hackers, we who know what to do and how to navigate these waters, we can continue to pick up more and more funding, especially for our business, without all the paperwork and all the things that prohibit you from being approved. We won't need those because they don't need them. The Underwriter software won't need that information because your data, your performance, all the behaviors they're reporting on, they already know the answers, a yes or a no, just by looking at your data. And what if you had total control over your data so that you could get a yes every friggin' time?
Well, and I think it's important to note that this is a podcast not just about being fundable, but about being fundable in business. Because if you're fundable in business, you're fundable
on your
right?
personal, no doubt.
And so it's about having the right pieces of fundability of your profile in place, so that we can hit that 80% of business lending that's incorporated in your personal profile.
Yeah, don't miss what he just said. If you are fundable as a business, you're fundable as an individual for your cars, homes, and all your personal all your personal credit needs. But the thing is that if you don't know when the entrepreneurial spirit is going to hit you, if it hasn't already. You don't know what venue, real estate investing, note buying, Amazon business. You have no clue. If you're not doing it yet, you have no clue what your future looks like. What if you were to start preparing yourself to be able to execute on any possibility in your future?
And what if you do have a clue and you didn't know that you probably should begin
possible.
Preparing yourself? Because some of the saddest times at our company are when we meet somebody who feels like they've just wasted 5 years, 10 years in a business and not waste. That's a harsh reference.
They built their business,
but
couldn't
couldn't grow it.
Yeah.
And so all of a sudden they've reached this cap where they're like, I can't go any further. I can't do any more because they didn't know.
And they couldn't get other people's money so they could invest it in these their growth opportunities. They had no clue, right? They come to us. People come to our boot camps all the time. And they're like, why didn't I know this 10 years ago? I've just wasted all this time spinning my wheels because I didn't know, and no one was here to tell me. Well, we're here to tell you guys, this is what we're here for.
Well, and we have clients who use hard money. We've used hard money
absolutely
in our investments. I've had good experiences. I've had bad experiences with hard money in my investments. Right?
Wow. That's weird that we're just like everybody else,
right?
And learned the hard way.
But if I can have access to money that is what a third of the cost, in many instances, right? If I can have 5 to 7% instead of 10 to 17%, depending on how well you know.
And no points.
No points, right? Why wouldn't I? And it's just that, we don't know what we don't know. That'll be a theme in many of our conversations.
Write a check, do a deal. And if you're not writing a check to do a deal, you don't know yet everything that is possible. So, like I said.
And what we teach doesn't make hard money lenders obsolete.
No.
right? We're
No.
not talking about this. It could replace them. I mean, it did for Teresa.
Yeah.
Right. She was
yeah.
able to get into a $1 million asset that she wouldn't have without our help. And,
Correct.
And I'm sure you guys have heard Teresa's story. If not, hey, jump over to fundinghackers.com and check it out.
You'll see it, and it's breathtaking. It's such a beautiful soul, and she nailed it.
Yeah,
that was
nailed
that
it.
example when you said we'll talk about it later, where they literally said, "Oh, your credits, it's what was the language? Your credit is really fine."
Yeah, she says it best in her own words because I can't think of the exact quote either.
Go to fundinghackers.com and she's right there.
So with understanding what automatic underwriting systems are looking for, it gets you in a position where you can get a fast approval.
Right.
You get approved for more.
Because they trust. FICO has built the underwriting systems, and remember, FICO actually works with. We met the lender liaison that worked at FICO, who is in charge of syncing up their internal underwriting with the FICO underwriting. Because they trust that data, they automatically give more approval, higher approvals through automatic underwriting than they ever did with manual underwriting.
Yep. Yeah, 100%. 100%.
Yeah.
And that's the key to being able to hack the funding process.
Yeah.
Right? That's the first step.
The first step is know the rules of the game. And we're going to continue to go through all of these rules over the episodes. But Brad is saying it spot on. We cannot hack underwriting guidelines unless we know what they're measuring. Yep. And knowing those measurements and knowing that their machine code, their artificial intelligence that's being written in. If you go to FICOworld.com, you're going to see on the masthead, it's like artificial intelligence protects your money, or the equivalent.
Something like that.
But that's what it's all designed to do. Because when do lenders make money? When they lend. But only if it's a sure thing, if it's a safe bet for them, do they win? We got some great things on how they actually make money with these underwriting systems. But you need to understand that if you're interested in this, if you're following us now because this is your jam, then we're going to walk you down that path of what the rules are, how to navigate those underwriting criteria, and get the approvals that you're looking for. Because as we've said before, we only win when you win. So that's what we're all about. Anything else? I think that wraps up our episode about how to create the best. If you know the rules of the game, you can win that game.
Yep.
But you can't win it unless you know the rules. And we'll get it. I haven't even talked about basketball yet. Wow, that's weird. Look at that.
Merrill is prolific in his basketball
metaphors.
references.
Yes, especially since I don't even watch the game. So
Yeah.
this will be a fun experience. Anyway, guys, we will see you next time. Go to fundinghackers.com to see exactly what we're about.
Fundinghackers.com /blog to check out our blog, to see any other podcasts that are fundinghackers.com to see our podcast as well.
Oh, yeah.
Go to our Facebook. Check us out. It's either at this point it's either under Credit Sense or Funding Hackers. So check it out.
It's awesome. We are transitioning because the Credit Sense, we're not about credit anymore. We used to be. And now we're about funding and how to teach you how to hack funding. So we thought it was time to represent in the world what we do for you and for ourselves. We haven't even talked about my approval.
Absolutely.
Okay.
Right. So remember to like this, share it, download it, subscribe if you haven't subscribed yet, because we're going to continue to dive into the depths, and we're going to help you become fundable so you can have the money to do what you want to do with whatever it is that's important to you.
Yeah, absolutely. Peace, guys. Hey, guys. Thank you for listening to Are You Effable? Please leave comments because I would love to read about your aha moments from this episode. And be sure to visit fundinghackers.com to view the blog post, get important links, join our community, and much, much more. And you gotta tell your friends about this podcast. We want them to become effable too.